In a devastating blow to American agriculture, China has orchestrated what experts are calling an economic chess move of massive proportions. Breaking news from March 2025 reveals Beijing's cancellation of 1.8 million tons of soybean contracts, resulting in a staggering $22 billion loss for the United States. This isn't just another trade dispute. It's a calculated strategy that's sending shockwaves through America's heartland. Let me break down what this means for you and your wallet. China, controlling 13% of global trade, has canceled 16 major soybean contracts, demonstrating they can inflict serious damage without firing a single shot. Missouri farmers are bearing the brunt, facing losses up to $1.1 billion in 2025 alone. But here's where it gets interesting, folks. Remember those 42,000 acres of American farmland owned by Chinese interests through WH Group? That's now become a strategic pressure point in this economic chess game. Meanwhile, Brazil is emerging as the big winner, stepping in to fill the void and potentially unseating the US as China's primary trading partner. This shift isn't just about soybeans. It's about global economic dominance. Your grocery bills are about to feel the impact. The Department of Agriculture projects a 6.4% increase in food prices, adding roughly $47 to monthly household expenses. But that's just the tip of the iceberg. China's strategy goes deeper. They've been quietly reducing their U.S. Treasury holdings from $1.06 trillion to $816.3 billion over 17 months. Simultaneously, they've accumulated over 300 tons of gold since 2022, bringing their reserves to 2,213 tons. While Wall Street analyzes charts and former President Trump announces his Tariff Liberation Day, American families are left wondering, is this the beginning of a new economic order? One where China holds more cards than ever before? Stay with us as we continue to unpack this developing story that's reshaping America's economic future. In what's being called an unprecedented economic upheaval, former President Trump's latest tariff announcements have sent shockwaves through global markets and American industries. The confusion began when Trump declared Liberation Day, launching social media posts threatening widespread tariffs against allies Canada, Japan, and European Union members. The announcement's lack of clarity has left markets and experts scrambling. Peter Doocy from Fox News highlighted the uncertainty, noting that the final policy remains unclear, wavering between a flat 20% tariff or a sliding scale based on other countries' rates. This ambiguity triggered immediate market responses, with stocks plunging and inflation indicators rising. The agricultural sector raised urgent alarms. Senator Tom Tillis, RNC, voiced concerns about farmers one crop away from bankruptcy. Industries like meat processing and American popcorn exports face significant European market losses. The Wall Street Journal published a scathing editorial questioning the economic logic behind mass tariffs, while Bloomberg warned that Trump's 25% tariff proposal could hand global auto industry leadership to China. The timing is critical, as Asian competitors China, Japan, and South Korea are forming an Asian Fast and Furious alliance in manufacturing. This development threatens American industrial competitiveness as production costs increase due to tariffs on components and materials. The public's response was reflected in Wisconsin, where Democrat Susan Crawford defeated a MAGA-endorsed opponent, despite massive campaign funding and Elon Musk's support. Political analysts view this as a referendum on economic stability versus chaos. As markets react and international tensions rise, the question remains: will this Liberation Day liberate American industry, or has it declared economic war on our allies? Here's a 1875 character news story based on the provided content. Breaking news: trade war escalates as Canada launches unprecedented boycott against U.S. In a dramatic development that's shaking North American relations, Canada has launched a massive economic response to President Trump's controversial 25% global tariff proposal on imported vehicles. Prime Minister Mark Carney is leading what experts call the strongest pushback against U.S. trade policies in recent history. The impact was immediate and severe. Flight bookings between the two nations plummeted by 70%, as Canadians initiated a widespread boycott of American goods and travel. The Buy Canadian Only movement has gone viral, with social media flooded with images of shoppers at major retailers like Costco deliberately choosing domestic products over U.S. imports. Even more striking is the political fallout within the Republican Party. Key GOP figures, including Senators Mitch McConnell, Susan Collins, and Rand Paul, have broken ranks with Trump, warning that his tariff plans could push the nation into economic crisis. Former Trump ally Doug Ford made headlines declaring, "We will maximize the pain for America. Sorry for the American people, but it's Trump's fault." Meanwhile, Trump's recent unsubstantiated claims about Canada being a drug den killing Americans have further strained diplomatic relations. These accusations come at a critical time when the U.S. economy faces mounting challenges, including soaring gas prices, rising inflation, and fears of recession. Critics argue that Trump's global tariff strategy serves more as a distraction from domestic economic issues than a solution. Economic analysts warn this could trigger a broader trade war, not just with Canada but with all major U.S. trading partners. The timing of this trade dispute is particularly concerning as it coincides with broader market instability. Instead of addressing pressing domestic issues, Trump's administration appears to be escalating international tensions, leading some economists to quip that "Make America Great Again" is becoming "Make Recession Real Fast." Here's a 1875-character news piece based on the provided content. In a remarkable shift of national sentiment, Canadians are increasingly turning their backs on U.S. travel destinations, choosing instead to explore their own backyard. This surge in domestic tourism isn't just affecting travel patterns. It's becoming a powerful symbol of Canadian sovereignty and resistance against controversial U.S. trade policies. Tour operators report unprecedented demand for cross-country experiences, with many domestic packages sold out months in advance. Meanwhile, bookings for U.S. destinations have plummeted, reflecting a deeper cultural and political transformation in Canadian consumer behavior. The movement gained momentum following a massive protest outside the U.S. consulate in Toronto, where demonstrators rallied under the slogan "Elbows Up," a powerful symbol of Canadian resilience. MP Charlie Angus captured the nation's mood with his bold declaration, "We will never be the 51st state of the U.S. We will not kiss the ring of the dictator Trump." Prime Minister Mark Carney's administration has taken a firm stance, pledging to protect Canadian workers, businesses, and national interests. This unified response has garnered international support, with nations including Australia, France, and Scotland backing Canada's position. Meanwhile, in the U.S., public trust continues to erode. A 2024 Pew Research report revealed that 70% of Americans feel manipulated by oversimplified political messaging lacking factual basis. This distrust is particularly evident in swing states like Pennsylvania and Michigan, where economic disruption has hit hardest. Recent legal developments have only deepened these concerns. In February 2025, a New York Supreme Court ruling ordered Trump to pay $354.9 million for fraudulently inflating his net worth to secure loans. The court described the conduct as deliberate and repeated, adding another layer to the complex narrative of political and economic instability. As this situation unfolds, observers question whether Canada's resistance will inspire a global wave of similar movements, potentially reshaping international trade relationships and political alliances in the years to come. Good evening, I'm bringing you concerning developments about America's economic stability and leadership crisis. Markets are showing severe strain, with the Dow Jones plummeting nearly 900 points, the steepest decline in 2 years. This directly impacts your retirement accounts and investments. Let's break down what's happening. We're seeing skyrocketing prices at grocery stores and gas pumps, hitting American families where it hurts most, their wallets. Experts at the Brookings Institution report that leadership decisions lacking scientific consensus cost our economy over $800 billion in late 2020 alone. The situation has gotten so serious that our traditional allies in Europe and Japan are questioning America's reliability. They're watching our markets tumble, while leadership dismisses economic warnings. The Reed Index has dropped 2.4% after recent developments, showing investors are losing confidence in corporate transparency. Supply chains are in chaos, businesses can't get materials, and prices keep climbing. Our sources in the investment community are raising red flags about what they're calling a post-truth mindset in leadership. When basic facts become questionable and expertise gets dismissed, it creates a dangerous environment for investments and America's economic future. Those who dismissed early warning signs were wrong. We're seeing weaker administrative talent, highly politicized decision-making, and a concerning lack of long-term strategic thinking essential for economic stability. What's particularly troubling is how this affects America's position within the G7 and G20. The long-term strength of the US dollar is now being questioned in international markets. This isn't just another news cycle. We're watching real-time erosion of the economic foundations that have kept America strong for generations. Stay with us as we continue to track these developments and bring you expert analysis on what it means for your financial future. Economic tensions rise as trade policies spark public concern and corporate pushback. In a developing story across America's economic landscape, major manufacturers report significant challenges due to recent trade policies. Companies face skyrocketing costs for raw materials, leading to price increases and reduced consumer purchasing power. Industry experts warn that businesses are implementing production cuts and hiring freezes due to escalating expenses. This comes as the administration defends its controversial tariff policies, despite evidence of their negative economic impact. While President Trump points to stock market performance as proof of economic success, recent volatility has forced a shift in messaging. The administration now describes market downturns as temporary disruptions, though analysts express deeper concerns. Traditional corporate allies are breaking ranks. Major finance and oil sector players are questioning current economic policies. Town halls nationwide are becoming hotbeds of discourse as citizens voice concerns about rising prices and job security. Meanwhile, Elon Musk's increasing influence over public policy has sparked criticism. The Tesla CEO's involvement in social media management and civil aviation policy has triggered protests at Tesla locations nationwide. From Waterville to Columbus, demonstrators target Tesla showrooms with signs reading, "No cars from dictators," and "Tesla isn't neutral." This movement represents consumers using purchasing power as political leverage. The entertainment industry has joined in, with Bill Burr quipping about Musk's public image transformation. He's trying to rewrite his life like a movie. Saturday Night Live has become a platform for satirizing both Musk and Trump, though reactions remain divided along political lines. Questions persist about the implications of current economic policies and private sector leaders' role in shaping public policy. Markets remain volatile as businesses and consumers navigate this uncertainty. Breaking news: economic turmoil deepens as market signals flash red. In a dramatic turn of events, Wall Street is experiencing severe turbulence as the Dow Jones plummets 1.2%, erasing billions in market value. Economic experts warn of an impending recession, as Q1 GDP projections show a concerning 3% decline, marking a stark reversal from potential growth under previous policies. At the center of this economic storm is the erratic nature of trade policies, particularly regarding tariffs with Mexico and Canada. Business leaders express mounting frustration over constant policy shifts, creating an environment where long-term planning becomes impossible. The auto industry feels the squeeze as supply chains face disruption. Public confidence in economic leadership continues to crater. A Pew Research survey reveals that 62% of Americans believe efforts to control everyday costs have failed. Elon Musk saw his fortune plummet by over $100 billion in 2022 as Tesla stock crashed following controversial statements. The cultural landscape reflects this economic anxiety. Traditional political satire faces criticism from former White House advisor Stephen Miller for being too politically correct. Media analysts suggest the real issue isn't political correctness, but rather comedy's uncomfortable mirror to reality. Self-described conservative comedians have retreated into routines about vaccines and conspiracy theories, failing to connect with broader audiences. This shift in comedy mirrors the larger economic narrative, a story of institutional credibility eroding under inconsistent policies. As investors pull back and corporate partners go silent, the market sends a clear message. Even non-political power must answer to social responsibility. With GDP projections turning negative and businesses freezing expansion plans, experts warn this could be just the beginning of a more profound economic downturn. The question isn't whether the economy will suffer, but rather how severe the impact will be if policy instability continues. For millions of Americans watching their investments shrink, the answer may come sooner than expected. Here's the latest economic analysis causing concern across America. The U.S. economy shows troubling signs of instability, with recent policy decisions raising red flags among experts and business leaders. The immediate crisis centers on Trump's stance on tariffs with trading partners. The administration announced a temporary suspension of Mexican tariffs until April 2nd, but uncertainty looms about what follows. Adding to concerns is the sudden reversal of Canadian tariffs, particularly affecting the auto industry. Trump initially imposed these tariffs on Mexico and Canada, but now blames Canadian Prime Minister Justin Trudeau, accusing him of exploiting the trade crisis. These accusations create more confusion in an already chaotic situation. The numbers are concerning. First quarter GDP is projected to shrink by 3%, a dramatic reversal from potential growth. Experts suggest that maintaining Biden-era policies could have resulted in 3 to 4% growth instead. The stock market reflects this uncertainty through increased volatility. Key factors include policy reversals creating business uncertainty, GDP contraction projected for Q1, stock market volatility, deteriorating trading partner relationships, lost growth opportunities. The crucial question: are we seeing strategic policy adjustments, or are these warning signs of a severe economic crisis? The pattern of inconsistent decisions suggests deeper issues that could lead to serious consequences if unaddressed. This volatility affects both Wall Street and Main Street, where businesses and consumers struggle to plan in an unpredictable environment. The contrast between current performance and potential outcomes under stable policies highlights the real cost of this turbulence. The need for consistent, well-planned economic policies has never been more critical for America's financial stability and future growth.